Hey guys, Joe here from JCS-Charting. Last week I introduced my new gamma and open interest readings with that chart here. It has changed a little bit for the June contract. However, the May contract, which are these blue bars, hasn't really changed. There are still large gamma readings at the 22,000 level, which means the market makers hedged DAX into the 23,000 area, but they don't want the DAX to be there. So a pullback is still likely before that new May OPEX, which is due in 2 weeks. Also, the delta, that is the rate of change of volume, has the biggest reading here at the 22,000 level. So we dive a bit deeper now into it, and I explain you what's going to happen. A quick look at the DAX. We see here a clean cup and handle pattern from the low of April 7th. We got a neckline at the 21,300 level. First, I was going for a back test of that neckline. However, DAX just gapped up and stayed above since then. And we triggered that 100% for running higher at the cash session as well, and that got actually back tested quite precisely on April 30th. However, I still believe we're going to see at least a pullback near that level. That also is suggested by the latest gamma exposure. And also the open interest sits here at that level with the highest reading. We hit already the first target of that pattern here in blue. That was at 23,086, and the first main target of that green sequence is waiting at 23,244. And a quick look at the daily chart. We still have the Cetra, the cash indication here. The yellow line is the EMA 50, which got overgapped on the 23rd of April, and then during the session we back tested that moving average twice in a row. On the 24th, the same thing, and then that gap rally continued. On Wednesday, April 30th, we did something interesting once again. We gapped up and we just looked for a gap support right from that day of the 25th, and we did the same. On the 25th, we looked for gap support of the previous day. Friday, we just kept ripping after gapping up, so it was a gap and go. And I marked here these blue zones, which are basically runaway gaps, large gaps, and DAX just kept on holding these price levels and kept ripping higher. There's an important trigger, 23,038 on the daily, which got triggered for more to the upside, so there are much higher targets. However, I still believe we are running into a subcycle low next week. The previous one was a very shallow one, and I assume the next one could be actually a bit sharper, and we probably retest that low here of April 30th, which was around 22,200. And to finish off DAX, we have a look at the upside downside volume based on a daily time frame, and this is actually the whole year from May last year until now. And whenever DAX had such strong upside momentum, that means upside volume here in that area was much higher than downside volume. That rally had actually substantial lags, and it kept going higher and higher. The same is actually occurring right now. Upside volume is just grinding, the same as smart money at DAX. So that rally is actually supported by volume and also smart money. And by the way, this kind of data is provided by my partner, wallstreetcareer.com. If you want to have that data, I'm going to put a link in the description below. And if you want to have daily updates about DAX and the US markets, you are welcome to join JCS-Charting.com. You find plenty of updates there. You find my positioning, and you also get, as an advanced member, stocks on request, also updates on crypto and gold, silver, and so on, you name it. We continue with the NASDAQ. Last week we looked at the weekly time frame. This week we're going to do the same. We had that so-called pop gun, which is this candle here embedded within these two candles from head to tail. And it obviously popped to the upside, so that trigger is actually already on the up move. 21,310 is the target on this time frame. There is a chance that we're gonna retest 19,500. That is that trigger of that candle, the high of that candle. It might come with another back test. Be aware of that. I assume because Gamma is also at NASDAQ waiting a bit lower for a pullback. So there might be a nasty and sharp pullback before we actually run much higher. And by the way, this was my update from the 22nd of April of you see here NASDAQ 15-minute chart based on the cash, and we were going at that point for an ABC. All consist out of ABCs. This one was an ABC as leg A, ABC to the downside as leg B, and then we were going for a pretty high C leg of NASDAQ. And we were just on Friday very near these levels. We're going to switch into the live chart. Now this is a live chart, and if we duplicate that first leg A from that point B, we end up at 100% duplication at 2281. That would be the target for leg C. However, we are already in that target range. We came in there, we gapped in there on Thursday, and on Friday we got established above that level. However, I don't believe that leg C, which you see in here, this chart is not updated yet, that we are running that deep. I actually believe that we are running much higher. NASDAQ, by the way, is the only one compared to the S&P and the Dow, which has hit already the min targets. So the NASDAQ is already good to go for a pullback, and most likely I favor at least a pullback to 19,011 to backtest these lows from last Wednesday. And this is basically the same chart for the S&P 500, 15-minute chart, cash indication. And if we duplicate that first leg here from leg C, the bottom of leg B, we end up at 100% duplication at 57.47. However, the min targets are already hit. We only hit the first min target at 56.81. 57.54 matches the 100% target for leg C. I also assume a pullback here to retest at least these low from at 54.35, and there would be also a back test of these highs we made just at the beginning of April. So we might just see a back test, a retest. We might overshoot that a little bit, and then we run higher. Also considering the latest open interest here, and also have in mind that JP Morgan caller, it's calling for much higher levels at the S&P. Yeah, last but not least, the Dow Jones. This is an H4 time frame, JFD indication. So these price levels, they run pretty much all the time. There is this Elliott Wave wedge here. It has a bearish nature, and that target line runs around 39,100. And something I didn't really like last Friday is that that was my resistance zone here, shown in red, and it broke, and the close even broke that as well. There are two sequences above 41,264 and 48,882. Both sequences triggered for higher. The green one triggered much clearer than this one here. And there's another tiny bearish Elliott Wave wedge, which should get us at least into the 4,600 area next week. I have my doubt that we go all the way down here. We probably just backtest again that low from either that is May 1st or April 30th. I would prefer another nasty quick dive to the downside before we run higher. Usually after these sequences trigger, there is usually a pullback associated with it, and before that real rally starts to hit these min targets. So basically all indexes have the same idea, a pullback and then running higher into May. Yeah, very quick update. If you want more, as I said, you're welcome to join the Discord via my website. And if you liked that short update, leave me a like or a nice comment. I see my members tomorrow, and I wish you a nice remaining Sunday. Bye-bye.